Hey folks,
So
welcome to the Pipnotic Symposium on the 15th of January 2025. Haven't done a lot of these recently as we've been on the road. We're still in Sydney, on the tail end of our holiday, which is actually turned out to be a remarkable place. One thing I'd like to say to all Aussies, you're bloody lucky. It's an incredible country. It's so enormous and there are so few people, and it's just like living in a zoo. It's incredible. There's wildlife and beautiful, pristine, clean nature absolutely everywhere. So thanks for having us. Okay, so I want to start off by showing you a trade simulation tool I'm building currently that works. Well, currently it can be used for identifying like optimal risk-reward ratio, risk per trade, leverage, sample size, and for generating statistics, like Sharpe ratios and whatnot, and then the applicable algos here. And it's pretty incredible because it makes you realize that you don't have to win 80% of the trades. You just have to win enough. And so if we put the sample size of, let's say, 50 trades, and we say that we're winning at 47% of the time, and the risk-reward ratio is 2.0, if we run that, you can see that the results look pretty reasonable. So we're getting about a 35% return, and this is on 50 trades, which is not a lot. That's a pretty modest sample size. Okay, and this is if we're kind of day trading. We're running the stats on for a daily basis. If we're doing like swing trading or longer term trading, then you can adjust these metrics. But I'm pretty much always on the 4-hour daily chart, so this stuff is slightly slower. But it's incredible because if you have, for example, if you put this on 10 trades, then maybe we're going to get some negative results. If we keep doing it, there we get some slightly negative results. And if you look here at the stats, you can see the max loss streak for 6 trades in a row. So 1, 2, 3, 4, 5, 6, actually 7. Okay, so that's a lot. So this is the first one would be here. 1, 2, 3, 4, 5, 6. Okay, so that's a lot. That's 6 losing trades in a row. And who hasn't experienced that before? When you do experience that, you think like, oh no, everything is wrong. I'm terrible. I can't do things right. But you have to remember that if you're focusing on important stuff like applying the strategy whenever it's validated, then you're doing the right thing because trading is just a numbers game. And so if we increase that to, let's just put a random number. If you put 0, it generates a random number. And let's say that we have less. Let's say we're winning, about a third of the trades. Okay, and we have a risk reward of 2.0, and we're risking 0.25% per trade. Leverage, let's see, we'll leave it on 5. A number of trades, this is just a random number between, I think it's 100 and 5 million. That's a lot. But if we just look at how this affects the results, we'll just run that. And if you look here, you can see that we did 2,126 trades, and we did almost like a Forex at its highest point, and then it started to go down. But we're still in profit. We're still up 85%. So that's incredible. And if you increase this just a little bit, you don't even have to do it a lot, like 2% increase in winning rate. Just look at how this is reflected in the results. And here we had 829% return. It's incredible. That's incredible. We had a max drawdown of about 55%, which is a lot, but relative to this, it's not a lot at all. And so we will be having drawdown in our profits because we're already in profit very quickly. And so that 55% is probably from this peak to this trough just here. Okay. Sharpe ratio 1.05, not great. But it's very interesting. And here we have our average winner to loser ratio, which is just shy of 2, which is incredible. And if you're able to kind of bring this up just a little bit, even like a couple more percent, and then we'll run it again, and you can see what an incredible effect this has. And I mean, you're not going to get results that are like, I mean, some people get 80% and we'll just run those results, but that is just silly, because it goes almost exponential. You can see, I mean, how crazy it gets. And that's silly. So that's not necessary. Okay. And this is just numbers running an algo. Okay. That's all it is. It's just a simulator, but it's not considering commissions and whatnot, but I'm going to add all of that eventually. But if you're just at 50%, let's say just less than 50%, let's say 41%, okay, 41%, and we run that. I mean, look at that. I mean, everyone is going to be happy with that. This is 4,000 trades. That's a lot. So if you're on the hourly chart, that's probably going to take you maybe several years to accomplish that. But if we put that on, for example, 200 trades, which is reasonable, and we run that once more, you can see that the results look incredible. We have 53%, 200 trades. I mean, that's going to take, several months. It's incredible. And if we do, let's say on average, we're doing 5 trades a week. Okay, that's 20 trades a year. That's about, how many do we have? Yeah, let's maybe do 252. That's how many market days there are. When we run that, what do we get? We get 194%. Okay, and we're winning 41%, and we have a risk reward of 2.0. That's remarkable, absolutely remarkable. And I think a lot of people, they get, let me just run another one. Show the slider, so we can kind of look at that again. And so here, we just whack that up there. And you can see in situations like this where we have, move that in so we can examine that a little bit. And we have that little piece here. I mean, there are a lot of losses here. There's 1, 2, 3, 4, 5, 6, 7. There are 8 losses in a row there. That's terrible. That's a lot. And that's psychologically, that's very, very taxing. And so when this happens, you might completely lose faith in the system, in the algos, in the ability to trade. But at the end of the day, you can't. You just have to look at the bigger picture and realize that that's only 77 trades out of 252. Okay, so if you just say it's a numbers game, blah, 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 slowly we start to recover, we move sideways for a couple of weeks, and then we go higher, sideways, we give it back a little bit. Over time, this numbers game plays out, and it results in results like this, with max drawdown of just shy of 10%. It's pretty awesome. We have a win rate of 44%, so we're winning about 44% of the trades. Our average winner to loser is 1.98, which is good, but it's you don't have to win all of the trades, is what I'm essentially trying to say. So if we go down to, I don't know, I've never tried this, let's say 20%, 1/5 of the trades, and we have, let's say, 6 risk reward. See what that gives us. And it still gives us incredible return. That's over the course of a year. Okay, so we have 387%, and where is it? Win rate 22%. Average winner to loser 5.37. Yeah, 5.37. So it's not even 6. Because these numbers are generated based on like real data, not what I type in here. And so you can see, that's crazy. That's crazy. And we have a max drawdown of 22%. Incredible. That's incredible. But this is perhaps not realistic, but I did the numbers, and about 2.3, 2.4 is pretty reasonable, and a hit rate of about 40% is reasonable. And let's say over your career, let's say 10 years, let's say, so that's going to be a year, so let's say times 10, let's just add 10 to that. Okay, so 2,520 trades. Okay, we're going to win about 40% of the trades. We have an average risk of reward about 2.3, risking 0.25%, only 0.25%, using leverage at 5 times leverage. And these are shorter term trades. Turn that off. Using buy and sell zones, we run that. This is over a 10-year career. I mean, 309,000%. That's crazy. You turn $1,000 into $3 million. That's over 10 years. That's incredible. That's an absolutely staggering result. And it depends, obviously, on market conditions and whatnot. But it just goes to tell that you don't have to win all of your trades. And even if we whack that down to 30%, 34%, and we run that, we still get a positive return. We get 200% over 10 years. Okay, and we're winning a third of the trades. Okay, and we have an average risk reward of 2.4. Obviously, this is a lot worse. But it just goes to show that it's okay to lose trades. Okay, well, I'm going to keep building on this, and I'm going to keep showing this stuff because I think it's quite fascinating. Yeah, and I'll leave it at that. If you have any questions, please let me know. And once again, thank you so much for watching. And I'll be back in Indonesia working from the 20th of this month.